I used to call it the IRS loan. It was cheaper to not pay quarterlies, less than 3% a year. It's cheaper for me to keep the cash in my account than pay quarterlies, especially if the only penalty is 3%. Now, what's sad is that last year they added 250% more interest to those charges. That's 2.5 times more interest than it used to be.
Hi, and welcome to this episode of Stacks Over Tax. I'm Sterling Grace, and this is Mark Lewis. And today, we're going to talk about quarterly taxes. When you need to file and why you need to file, and do you need to file if you're just a business or if you're a person? Mark, I think a lot of people are super confused about what quarterlies are all about and if they need to do them. And sometimes the CPA says you do, and sometimes they don't. And so I was just wondering if maybe you could help give us some guidelines about that.
Yeah, quarterlies are they're kind of disgusting, really, because you're going along with your business and you're having a great time, you're making profit, hopefully, and you're like, yay, that's great. And then this quarterly deadline comes around in April, in January, and other parts of the year. And you're like, but this is my profit. I know, but you have to give up some of that now. Why? Well, because that's the law. You have to give up a certain amount of profits during the year so that you don't have a giant tax bill on April 15th. And they're like, well, yeah, but it's my money. I get to keep it, don't I? I mean, why? I don't have to pay taxes until the end of the year. Well, that's what we think when we're social slaves. When you're working at a W-2 job, you're like, oh, I only have to pay taxes at the end of the year and maybe I get a refund. Well, yes, but let's look at the W-2. So have you ever had a job?
Yes. I had a job the time I was 14, actually. So, at least 10 years. So.
Yeah, 10, 15 tops. Yeah, for sure. So you get that you have, let's say you make $5,000 a month. And do you get all that money? No. You totally don't get any of that money. You have some of it taken out for FICA. That's the Medicare and Social Security nonsense. And then they take out some for your 401k. And then they take out some more, a lot more for your federal taxes. Now, most people don't realize that the company isn't the one taking it out. It's required by law for them being the IRS, to take a certain portion out of your wages so that it goes toward paying tax. Most people don't realize that the W-9 form that you fill out that says, what are my exemptions? That's the form that determines how much they take out of your W-2, your employment. So for example, if you had 5 kids and you itemized deductions because you had a big house and a lot of property tax and interest on your house, like we've talked about in some other podcasts that you can deduct, then you might actually get much less of your taxes taken out of your W-2 job employment checks because you'll have less taxes to pay. And what the IRS doesn't want to have to do is pay you a huge amount at the end of the year because it's a problem for them. It's also not something you want to do because now the IRS is holding all the money you could be spending all year. But they do take out a certain amount of your money every month out of your checks or biweekly or whatever that is for you, because for 2 reasons. One, hey, people are stupid. If they didn't take money out, you'd spend it, I'd spend it, we'd all spend it. And then when it came time to April 15th, you wouldn't have any money for taxes. But the second reason is they want to keep their money where they like it in their little pockets so that the money is not in your pocket and they can do whatever they want with it. So quarterlies for people with jobs, JOBs, actually happen every month. Every time you get a check, they're taking money out. So for businesses, we don't have to deal with that except every quarter. And the rules are pretty bizarre, but they basically come down to this. The IRS does not want businesses having large tax bills on April 15th. In fact, that's illegal. In fact, with a C corporation, if your tax bill is more than $500, that's a violation and they'll fine you for it. That's not the end of the world. But if it was $5 million, yeah, you're going to be in big trouble. For most social slaves like us, it's really, again, lots of rules. But if you can keep your tax bill below $10,000, you won't have criminal investigation division coming after you after April 15th. But here's the basic rule on how it works for both social slaves. Because if you're a Schedule C person, you don't have a job, but you don't have an LLC or a C Corp or an S Corp. It's the same thing. You don't have a W-2 job, but you got your lemonade stand on the side. You still have to pay quarterlies. How does it work? You're required to pay either the amount of tax that you paid last year divided by 4 for the 4 quarterlies, or 90% of what you expect this year's taxes to be. And you're like, well, how do I figure that out? Well, hopefully you have a business where you're kind of figuring out profits and things like this. You can sort of estimate. And if you have, if your company is making less than $10 million a year, then you get what's called the safe harbor rule, where, some businesses, like sometimes our business has a high and sometimes it has a low, and you can't really average out what you expect your quarterlies to be, because maybe in a quarter you have a downturn. Maybe you take a loss in a quarter. So with the safe harbor rule, you don't have to pay in quarters where you don't actually make money. Now, if you have a big corporation, more than $10 million, then you actually do. That's rough. But for most of us watching this, you don't make any money in a quarter. You don't have to put anything into quarterly. But you still have to have by the end of the year, and for us as social slaves, that's January 15th. If you have a C corporation, that's December 15th. It's a month earlier. You have to have paid enough quarterly estimated taxes. Another thing that they say, estimated taxes, so that you either paid last year's taxes or 90% of what you expect your tax bill to be for this year. And like, well, how is that good? Well, think about this. What if this year, Sterling, you had a big windfall? You didn't win the lottery. Maybe you did, but that won't help your business. So let's say you did win the lottery. Sterling's sure she's going to win the lottery, which we all hope she does. You do win the lottery. You deploy that money into real estate. You make a bunch of killing in real estate, and millions of dollars come to you this year. Well, the rule is you got to pay either 90% of what you think this year's would be, which would be a lot, or last year's. Well, last year's, let's say you made $50,000 in your business and your taxes were $5,000. So you made $10 million this year in taxes, but your quarterlies only require you to pay last year's, which is $5,000. Now, of course, on April 15th, you got a lot of tax to pay, but technically you're okay. You're technically okay because you generally followed the rules. And so there's also some other rules around social slaves. If your adjusted gross income is more than $175,000, you have to actually tack on a little bit more. But otherwise, that's how it works. And it's not very nice. And for C corporations, they really want you to pay digital payment system. And for social slaves, you can still mail in your checks. They would rather have you do it digitally too, but that's the thing. Now, what happens if you don't do that? Well,
if you're loving what you're learning today, make sure you click the subscribe button below and ring the bell so that you get all the notifications when we release new videos.
They can come in even with the safe harbor rule and say you should have paid quarterly taxes, and we're going to retroactively act like you didn't and charge you fees, penalties, and interest on money that you didn't pay. Now, what's sad is that last year they added 250% more interest to those charges. That's 2.5 times more interest than it used to be. It actually used to be, I used to call it the IRS loan. It was cheaper to not pay quarterlies. It was like, I don't know, less than 3% a month, or no, sorry, less than 3% a year. And I was like, I don't want to pay. It's cheaper for me to keep the cash in my account than pay quarterlies, especially if the only penalty is 3%. Fine, no problem. It's 8% now. You got to be careful about this. Is this making any sense to you?
Yeah, this makes sense. Now, the question I have is like, let's just say November came and somehow I just had this big windfall. And should I go ahead and just send an extra payment just because?
Well, you can always prepay. You can always do that. But why? Why give IRS money that you don't owe early? I mean, in fact, let's talk about this. Unless you're buying, let's say, the brand new Tesla that's coming out, and you're prepaying a certain amount, in some cases, maybe the whole amount of the car, you're getting some kind of value for doing that. What's the value? Well, you get the car before anybody else. And for 5 days until everybody else gets the car, that could be great. But with taxes, there's no benefit in prepaying. And if you didn't prepay, that's way, way better because the money stays in your coffers, in your bank account, in your whatever, your exchanges, your brokerages. And so now you're just prepaying the IRS for no good benefit, for no good reason. They don't give you a bonus for prepaying. They don't give you some of the tax off your bill for doing it. It's just people do it. I don't know why. There's no benefit to it.
What if you're a person who's never done quarterlies? Should you just start this quarter, or should you, I don't know, do you need to notify them that you're going to start giving them quarterlies? I don't know.
No.
Maybe just start.
Well, so let's also be clear about what if you had a business that never made profit or hasn't yet made profit? Well, what was last year's tax bill? Zero. Do you owe quarterly taxes this year? Nope. No matter how big the tax bill is, it's still not, you have to pay up to last year's quarterly tax bill. What was it? Zero? What are you this year? Zero? Okay. So no, you don't have to notify them. You do, if you're going to file electronically, you have to set up the electronic account with them, the FTPS, whatever it is, system, and set that up with your bank account so that you can wire it to them. That's how they would rather have it. Or I guess it's ACH now. But once you do that, they're like, oh, look, free money. And they'll cash it, and you make sure you don't forget that you paid. Because then they'll send you a nasty letter after you file your taxes going, you paid too much. Now we got to send you a check. Which, by the way, there's no more checks. Just so you guys know this, they're going to do everything ACH. Isn't that convenient? So now you have to give them your banking information if you want to get a refund. They won't send checks anymore, which is too bad.
You can give them your PayPal? No, probably not.
I don't think so.
Probably not. Wow.
That's the rules. I mean, quarterly suck. They really do. And the less you have to pay, the better off you are. But that's how it is with taxes anyway. So, we never want to pay more than the minimum the IRS allows. And there's no problem with paying the minimum. It's not like, oh, well, I'll pay a little more to make the IRS happy. They don't care. As long as it's required and you paid what you're supposed to, they're good.
Now we know. We can get right on that. And if you need help with sorting this out, by all means, reach out to us and let us guide you the right direction. As for winning the lottery, it's getting very serious around here, Mr. Lewis, because David Lynch's beautiful estate here in Hollywood just went up for sale. So now I definitely need to win the lottery sooner than later because it's $15 million. But
David Lynch's estate's only $15 million?
I know. It's that, and then there's other property. There's other like structures. There's basically 3 houses on the property.
Wow.
So, now aren't you hoping that I win this week?
Look, I'm always hoping you're going to win.
Yes,
me for too. Sure.
So
that'd be a heck of an Airbnb, David Lynch's house.
It is lovely. It has all of his recording spaces. And lovely. So, yes. Well, definitely have to go on our quarterlies in the meantime.
I'm afraid so. Thanks so much for joining us. And if you really appreciate what you're learning here, go ahead and hit the subscribe button below and make sure to click that bell so that you get all the notifications of new videos and content that we have coming out. And check out our next video.
And if you loved everything you heard here today and want more, make sure you click the subscribe button below and ring that bell, hit our like button, and then check out the next video.